Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of big business, especially when it comes to those massive SEC reports. Today, we're diving into Evolution Metals and Technologies, Corp's annual report. And let me tell you, this company has been through a major transformation. Think of it like a superhero origin story. Going from an empty shell company to what they hope will be a critical player in the materials world. So, what is the big deal with this filing? It is their annual report, a deep dive into how the company did financially and strategically for the year ending the 31st of December 2025. But here is the catch. This report is all about the before picture of a huge event, a business combination that happened after this reporting period. It is like getting a detailed look at someone the day before they won the lottery. We see the old company SPAC Technology Metals Acquisition Corp, which was basically a placeholder, and get a peek at its very last moments before merging with Evolution Metals LLC. They were what is called a blank check company, a company with no real business, created just to find another company to merge with. They merged with Evolution Metals LLC, a company focused on recycling and processing materials like rare earth elements and battery metals. This merger, called the business combination, closed in January 2026 after the December 2025 reporting date. So, this report only reflects the pre-merger company unless explicitly stated otherwise. It is super important to remember that the financial numbers you'll see here are mostly about the old Wellsbach, not the combined Evolution Metals and Technologies Corp. That exists today. Evolution Metals, the company they merged with, was formed quite recently in February 2024. Their whole game is about recycling and, of life materials, turning trash into treasure by recovering metals like rare earth elements, which are super important for things like high-tech magnets and batteries. They acquired several Korean companies that are already doing this work, so they weren't starting from scratch on the operational side. After the big merger, Wellsbach became Evolution Metals and Technologies Corp, or EMT, and it is now a holding company. All the real action, meaning all the operations, happen under Evolution Metals LLC and its subsidiaries. So, the financials in this report are mainly about Wellsbach's journey until the merger and very little about the actual business operations of Evolution Metals itself. When you read these reports, you'll always see a section with a warning title like Cautionary Note regarding forward-looking statements. This is basically the company telling you, hey, we're making guesses about the future here, and things could go very differently than we expect. They list a bunch of risks, and for Endpoint, these risks are pretty heavy. Think about things like successfully blending operations after the merger, global demand for key materials, potential trade restrictions, delays in building new facilities, and challenges in finding enough raw materials to recycle. Pretty standard stuff for a company in this rapidly evolving industry. Now, let's talk about the risks. The company admits it has a limited operating history as a consolidated entity, which makes it hard to predict what will happen next. They also acknowledge they've been losing money and might continue to do so for a while because they're investing heavily in growth. This is a big one, folks. Not being profitable yet means they depend on outside money to keep going. They've lost money and plan to keep spending a lot to grow. This is a common story for companies trying to scale up fast. They need to integrate new businesses, build factories, and get their technology working perfectly. If they can't do all that effectively, or if customers don't buy their products as planned, they could be in serious trouble. Seriously. They even mentioned the possibility of not being able to continue as a going concern, which is a polite way of saying they might run out of money. One of their biggest challenges, getting enough spent lithium-ion batteries. They need these to make something called black mass, which is a key ingredient for battery materials. They don't actually have any contracts for these batteries yet, which sounds like a pretty big hurdle. They're also up against companies that are already good at collecting batteries. So competition is fierce. If they can't make their products cheaply enough as they produce more, their profits will suffer. They're betting on growing bigger to become more efficient. But if that doesn't happen, it is bad news. They also face risks from rivals who have more money, more experience, and are getting government contracts. It is a tough industry. Now for the financials of the old Wellsbach company, which is the only part covered by the audited financial statements here. This number tells us about the stock price after the merger, so it is a glimpse into the new EMC. Looking at the balance sheet, the story for Wellsbach is pretty clear. On the 31st of December 2025, they had about $4,000 in cash. That sounds tiny, but remember, most of their money, over $6.5 million, was locked away in a trust account. This money was meant to be used only for the business combination or to be returned to shareholders if the deal fell through. Their liabilities were quite high, over $9 million, with a significant chunk being loans from related parties. These are essentially loans from the company's own sponsors or executives. That is over $5.5 million in related party loans. And then there is the redeemable common stock. This is the stock that shareholders could ask to be bought back for cash. On the 31st of December 2025, the company had over $6.4 million of this stock, essentially representing a large chunk of their equity that could disappear if too many shareholders wanted their money back. Turning to the income statement for the year ending the 31st of December 2025, the company reported a net loss of almost $1.8 million. This loss was primarily due to operating expenses, as they generated no revenue. They simply spent money on things like general administration and taxes, making their operations not profitable. For the prior year, 2024, the loss was just under $900,000, so the losses actually got bigger. When you look at the net loss per share for the redeemable shares, it was a loss of 59 cents in 2025 compared to 23 cents in 2024. This widening loss per redeemable share highlights that the redemptions had a larger impact on the per share equity as the year progressed. The cash flow statement shows they used more cash than they generated in their operations, over $1.3 million in 2025. Most of the cash they moved around came from their trust account, mainly for redemptions and taxes. Remember, this company wasn't doing business in the traditional sense, so their cash flow was all about managing the IPO money and preparing for the merger. The going concern section is really important here because the merger happened after this reporting period. The auditors had to mention that there is still doubt about the company's ability to keep operating for the next year without more money. Even with the merger, they still needed more funding. This suggests the business, even post-merger, is in a precarious financial spot. Let's talk about the loans. Wellsback took out a lot of money from its own sponsor and officers. As of the 31st of December 2025, they owed almost $3 million in working capital loans and over $2.2 million in convertible promissory notes. All to related parties. This is super common for these blank check companies to keep things afloat, but it is a big chunk of debt that needs to be addressed. One interesting legal point is that their company charter sets Delaware's Court of Chancery as the only place to resolve disputes between the company and its shareholders. This can make it harder for shareholders to sue them, potentially limiting their options. Now, let's look at the leadership. After the merger, the team at Evolution Metals and Technologies Corp is quite seasoned. David Wilcox is the executive chairman, and he has a background in global finance. Frank Moon is the CEO with extensive experience in critical minerals. Andrew Naggs, the president, comes from a defense and military background. Christopher Clower handles finance and operations with a long history in finance and serving on international boards. John Orastia is the chief legal officer with decades of experience in complex litigation. These are some serious players, suggesting they are aiming for a high level of professional management. For the year ending the 31st of December 2025, it is important to note that Wellsback's old officers and directors didn't receive any compensation. However, the new agreements made at the time of the merger, and disclosed here, show substantial salaries for the post-merger leadership David Wilcox. As executive chairman, gets a base salary of $1.5 million plus significant stock options. Frank Moon, the CEO, also gets $1.5 million in equity awards. Andrew Naggs, the president, gets $1.3 million. Christopher Clower, CFO and COO, gets $1 million, and John Orastia, Chief Legal Officer, receives $1.3 million. These are significant compensation packages reflecting the company's ambition and the perceived value of their leadership roles. They also have a new equity incentive plan to award shares to employees and directors, with a large number of shares set aside for this purpose. Control of the company after the merger is heavily concentrated. David Wilcox, through a trust, beneficially owns a staggering 70.18% of the common stock. This means he has significant control over the company's direction. The other directors and executive officers as a group own over 80% of the stock. This high concentration of ownership by insiders means the company is heavily influenced by its leadership. Their auditor for the pre-merger Wellsback was Yuhi LLP. The fees for their audit services were relatively modest, around $130,000 for 2025. They didn't pay for any tax services or other miscellaneous fees from this auditor during this period. The auditor's report itself highlights that the company has substantial doubt about the company's ability to continue as a going concern. This is a formal auditor's statement that the company might not be able to survive based on its financial situation before the merger, reinforcing the need for that post-merger financing. And here is a look at the actual financial results for Wellsback before the merger. For 2025, they lost close to $1.8 million, mostly from general and administrative expenses. Their interest income from the trust account helped offset some of that, but they were still deep in the red. In 2024, the loss was about $900,000, so The financial struggles were evident even before the big merger. When I look at this filing, the story is clear. Wellsbach was a shell company with a ticking clock, managing its IPO funds and trying to find a merger partner. The real business and the financial heft come from Evolution Metals, LLC, the company they acquired. The numbers from Wellsbach's pre-merger period show a company burning through cash with no revenue, which is typical for a SPAC. The risks outlined for EMC post-merger are substantial, especially around securing raw materials and achieving profitability in a competitive market. However, the caliber of the new leadership team and the focus on critical materials give them a fighting chance. The future of Evolution Metals and Technologies Corp will depend heavily on their ability to execute their operational plans and secure the necessary funding. As the auditor's concerns about their ability to continue as a going concern suggest a rocky road ahead, they've got the vision and the team. But the financial foundation needs to be solidified quickly. What is your take on this company's new direction and the risks they face? Drop your thoughts in the comments below. If this breakdown was helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description, for more discussions and real-time insights. Thanks for watching, and see you next time on Corporate Decoder.